I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. Intensifying trade concerns soured sentiment for risk assets in global equity markets last week. Tensions escalated after China suggested that it could use its dominance in key rare earth metals as a trade war weapon. Then, in a Twitter post on Thursday, Donald Trump combined his big two presidential election campaign issues, immigration and trade, saying that the US will impose a 5% tariff, rising to 25% by October on all goods from Mexico, in a bid to stop migrants coming through Mexico into the US. While these tariffs would be a drag on global economic growth, there is a good chance that Donald Trump will relax some of these tariffs, especially if confidence and sentiment in US equity markets start to suffer, as he has on several occasions tied his presidency to the stock market performance. Furthermore, these proposals may come up against substantial opposition in Congress. On a positive note, however, this trade friction is likely to spur the Fed into cutting US interest rates. Now, it was a light week for economic data releases, but of most interest was the second release on US first quarter GDP, which was revised down very slightly to 3.1% from 3.2%, while the Fed's favoured inflation measure, the core PCE for April, came in at 1.6%, which is below their 2% target. This again suggests that US interest rates have peaked, and it is only a matter of time before the Fed starts cutting US interest rates. In the UK, the pound weakened slightly over the week as the market digested the results of the European elections. While the Brexit uncertainty will continue, given both the pro-Brexit and pro-European parties did well, the results of the election suggest to us that Tory MPs are more likely to accept a no-deal Brexit than a general election. And this all implies that the next move in UK interest rates will be down, despite the fact that it was only a month ago that Mark Carney raised growth forecasts and signalled that UK interest rates are likely to rise. Now, that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.